Great to have your company this Monday, the 10th of May. I'm Jessica Ramirez, Senior Market Analyst with Bell Direct. Well, today it's the eve of the Australian federal budget being handed down. A massive $4 billion injection is expected to be unveiled into infrastructure projects in Australia. So we'll be keeping our eyes on engineering companies, infrastructure companies, building and construction companies, just to name a few. But today, this week, the Aussie share market is expected to get off to a slow start ahead of what will be unveiled tomorrow night. Now, at the weekend, we did see US investors really shake off interest rate concerns and pull back fears. We saw the S&P 500 pop to a brand new record high. The S&P 500 rose 0.7%, while the Dow Jones broke its two-day losing streak. But the Nasdaq was the showstopper, I guess. It rose the most, 0.9%. Now, what to watch today locally? Well, the big thing is iron ore. Well, the iron ore prices surged 3% to a brand new record high, taking the key steel ingredient to $204. Now, the iron ore price expected to grow again because steel demand is strengthening, with China's steel futures continuing to rise, and this is supporting the iron ore price further. Now, what is happening in China? Well, China's steel makers are ramping up production despite the government there trying to curb carbon emissions. So a lot of analysts are coming out upgrading iron ore forecasts. Just look at Morgan Stanley. They're expecting the iron ore price to grow to $215 US. This will benefit a lot of Australia's top iron ore players. Just look at Australia's biggest iron ore dividend payer, Fortescue Metals. They previously paid out about a 9% dividend yield. Now, FMG, their shares are in a technical share price breakout, suggesting they'll run higher. Also in breakouts are other iron ore companies like BHP and Rio Tinto, as well as Mineral Resources, MIN. And a smaller company, an iron ore company, Brockman Mining, BC. They carry higher risk because they're pretty much just starting out. They're smaller, but BCK has got a joint venture with Mineral Resources in the Pilbara of WA. So keep an eye on those iron ore majors. Secondly, there's a lot of corporate news. Crown Resorts will be watched closely for two reasons. They've got a takeover offer and an increased takeover offer, that is, and a merger proposal. Now, Star Entertainment proposed a $12 billion merger, which will create Australia's biggest gaming company. Now, Crown has not yet come out and haven't formed a view on the unsolicited proposal, but Star says it'll unlock $2 billion of cost savings for the combined entity. Now, at the same time, Crown received an increased takeover offer from a US company that's already got a 10% stake in Crown. So Blackstone increased their takeover offer to $12.35. Now, that values Crown at $8.4 billion. And importantly, that offer is 4% higher than their previous takeover offer. Now, Crown Resorts not expected to be trading today, but keep in mind they last traded lower than those takeover offers at $12.12. So when they do resume trading, it's expected that they'll get a nice jump up. Now, secondly, in other company news, Pendal reported half-year results. They are also in a trading halt. They've announced plans to take over a US investment company for 413 million Aussie dollars, and that will increase Pendal's funds under management by 30%, meaning they'll be able to charge more money for their funds under management and return that to shareholders as well in terms of higher earnings and higher dividends. Now, that is of course an assumption, but Pendal's funds under management based on this proposed takeover offer will grow to $132 billion. Pendal shares, if you're interested in those, they're bullish and in a breakout from a technical perspective. They're already gained 12% this year. And lastly, in other company news, A2 Milk shares likely to come under further pressure today. A2 came out saying they won't meet their guidance. Their earnings will be significantly lower for two reasons: because of COVID-19, and secondly, the Chinese market is rapidly changing. Now, A2 shares, they're already in a sharp downtrend, but some brokers are expecting upside over the long term, so keep an eye on when their share price could potentially bottom and start to head higher. Keep an eye on some of those most traded stocks from Friday: Afterpay, Westpac, NAB and ANZ. They were the most traded across Bell Direct on Friday. Economic news, there's lots to go through today. Business confidence will be out for April. Of course, the Aussie federal budget handed down tomorrow night, and tomorrow during the day, new home sales are out. They're expected to lift 30% in April, and that's because building approvals are soaring. Now, trading ideas that could be worth a look, just a couple. Keep an eye on Regis Resources. They're a Bell Potter reiteration of a buy. RRL is the ticker code, but they have a reduced price target of $4.08. Now that implies 51% growth in a year. Now the gold company plans to scale up and buy 20% of Australia's top 5 gold mine, the Tropicana gold mine. That means PRL could cement itself as a top ASX gold stock. EPS was dropped in FY21 to account for the potential takeover, but EPS was increased by 45% in FY22 and 46% in FY23. Lastly, bullish signals have been identified in Oceania Gold, OGC, hydrogen company HZR, Hazer, and Euro Manganese, EMN, and that's according to Trading Central. I'm Jessica Amir from Bell Direct. Have a great week.